Hello and welcome to the week ahead video with me, David Madden. This video is being recorded on Monday the 8th of August. Now before taking a look at the major events of the week just ahead of us, let's take a quick moment to recap the major events of last week. Last Friday we saw a very well received US non-farm payrolls report. It came in at 528,000, well above expectations of 250,000, and that sparked fears that the Federal Reserve might look to do another large interest rate hike in September, and in turn that put some pressure on the US500. As we can see here, it sold off. But in the afternoon, some of those fears faded and we saw a rebound in the US500. Now, US stock markets and the US 500 will remain in focus this week, as on Wednesday the US CPI report will be announced and on Thursday the US PPI report will be announced. Looking to CPI, Consumer Price Index in the United States is running at 9.1%, its highest level in 40 years. The rally in CPI and in PPI, the sharp rises in both CPI and PPI, has been the main driver while the Federal Reserve have been hiking interest rates. So depending on how the number of the PPI and CPI numbers come in, that could lead to an increase in volatility later this week. Looking at the price action of the US 500, as I mentioned, we did see a lot of volatility last Friday, but while the market continues to hold above these three simple moving averages, it's likely the more medium-term upward trend will continue. A rally from here could see a target 41.89, and a break beyond that could see a target 42.00. Looking at the price action in the last few days, we can see the market has seen a lot of volatility. Looking at the MACD indicator, we can see that momentum is in negative territory, implying the bears are in control. If we do see any moves to the downside in the US 500, it might look to retest 40.78, and a break below that could see a target 39.92. Also coming up this week, on Friday, we have the preliminary reading of UK GDP for the second quarter, and economists are predicting negative growth of 0.2%. Last week we heard from the Bank of England, who, although they actually hiked interest rates, they also gave quite a bleak outlook for the UK economy. They predict a recession they predict a recession in the US economy, for the UK economy rather, is in the pipeline, and they also feel that inflation could hit over 13%, 13.3% in the UK. That led to a broad sell-off in the British pound. We also saw that GBPUSD's downward move accelerated thanks to the well-received US non-farm payrolls report on Friday. If we do see a continuation of this short-term downward move in GBPUSD, it might look to find support at 1.1962, and a break below that could see a target 1.1889. Even though the shorter term trend for the currency pair is lower, it's worth noting the more medium term trend of the last few weeks is the upside. So if GBPUSD can manage to hold above this area here at 1.1962, that could be an early indication that the more medium term uptrend is still in effect. A rally from here could see it retest 1.2214, and a break beyond that could see a target 1.2292. So just to recap, on Wednesday we have US CPI, on Thursday we have US PPI, and on Friday we have UK GDP. Thank you very much.